All right. Welcome to the first episode of the Home Loan Huddle. I'm your host, Bernard Koff, and I'm thrilled to be here with my wonderful wife, Chelsea.
Hey everybody, I'm excited to be part of this first podcast. I'm awkward, so this is going to be fun.
Well, don't worry. No worries about anybody being awkward. We understand this is a topic that gets a lot of people nervous because we're talking about the biggest purchase that most of you will make in your entire life, buying your home.
Diapers. Oh, okay, yeah, buying your home.
So tonight we're diving into some common myths about home loans and home ownership. We'll also cover some recent financial news that could impact your decision to buy a home or refinance a home in the near future. Think of this episode as kind of your guide to navigating the current real estate and banking landscape.
So we're going to work with some myths this time
That's right.
around, right?
Yep.
Yeah. So growing up, I've always heard that when you buy a house, you need 20% down.
Sure. Yes. And this is one that I hear repeated over and over again. Such a common misconception. And many people do believe that 20% down payment is a must to avoid private mortgage insurance, also known as PMI. But that's not always the case. There are several loan programs that allow for much lower down payments. For instance, FHA loans. FHA loans like we got on our first home, they might only require 3.5% down. There are even some conventional loan programs out there that allow for as little as 3% down.
That's that's not a lot down.
No, it really isn't. And, people have a lot of misgivings about that. They don't really understand that those lower
Right.
down payment options are available.
I mean, it's kind of like cooking. You
Right.
have the recipe, but sometimes you go off the handle there, and yeah, it's not the conventional way to do it, but you
Exactly.
get the same result at the end.
Exactly. You don't need to follow any kind of a recipe. It's really just a matter of getting to that end goal. And however we can get you there, we want to make it happen. So, myth number two, your credit score has to be perfect to get a mortgage.
Well, I know that's not true because ours definitely weren't the best when we bought our house.
Right, absolutely. I think when we bought our house, we were both hovering right around the 600 mark. Uh,
Roughly, yeah.
and, I think we could have even gotten a loan with a little lesser of a credit score.
Yeah.
I remember being kind of shocked when I found out how low they could go. Some lenders are willing to work with borrowers whose FICO scores are only 500. As long as they're supporting income, we can do a deal.
Not everyone is very savvy when it comes to the credit score thing. Credit cards are real scary.
Yeah, they certainly are, and they can be misused and get us into hot water. But, with a good strategy for your finances, even a credit card isn't anything to be too horribly afraid of. Just use it responsibly, keep it below 30% of its limit, and pay it off as frequently as you can afford to. Now, a good strategy can help you achieve your goals, even if anything isn't perfect. But, what if homeownership's not in someone's goals? I mean, is there,
Well, they possibly think it probably would be cheaper for them to rent.
well, I'm not sure about that one. Man, this is a tricky one. In the short term, renting might seem more affordable. But when you consider long term benefits like building equity, potential tax advantages, buying can be a more cost effective option over time. And with the way the rental market is now, you never know how long you're going to be waiting for a rental or
True,
how much it's
and
going to cost to get into it.
everyone has had at least one horrible landlord.
Oh, goodness.
Landlord horror stories everywhere. But when you buy your own house, you are your landlord.
Exactly. And the only horror story to speak of is maybe one of a home that hasn't been maintained very well. But if you have a good realtor, that should be fairly easy to navigate too.
For sure.
So next we're going to talk about whether renting or buying is the right choice for you. And I think for this, really the question is, where are you at in your life journey? Uh, Now, for some, renting is much more convenient in their later years because they particularly want that maintenance taken care of. They want that security blanket of having somebody else be responsible for the actual upkeep of the property. Early on in life, even as young as 18, there's no reason to really prefer renting. A lot of people just simply think that they have to.
Because that's just the way everything flew.
Exactly. That's the way that everything has that they've been set up to expect it. I think that we're really setting our young people up for failure if we promote this idea that you have to rent when you're young because you can't afford to buy a house. You absolutely can afford to buy a house. It might take 6 months of smart budgeting, but we can get you there. Click on the link in the description below. Go to Easy First Home Loans. Check us out. We are here to help any borrowers in Maine who want to access homeownership, regardless of your current financial situation, how much you've got saved up, what your credit score looks like. We want to help.
And if you're just going from like one apartment to the next, you have to save up that money anyway for the first, the last, and the security deposit. And with loans like the FHA loan, where you only need 3.5% down, that's pretty much that exact sum right there. So you're raising that money anyway to move. So why not move into a place that you can actually call your own?
Absolutely. Now, next, I want to touch on, another, not necessarily a myth, but something that's maybe a little bit misunderstood at the present time.
All the
Now,
things about housing markets and going up and crashing and all that stuff.
yeah, exactly. And what is the biggest thing you hear when people talk about interest rates these days?
They are going up, 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 up.
Well, that may not be true anymore. So we have had some really, really good signaling the last couple of quarters. And with today's release of the Federal Reserve minutes from last month, oh, we got a we got a canine companion joining the stream.
You just want some notes.
That's okay. He's a good boy. He's a good dog. So with the release of the most recent minutes of the Federal Reserve meetings, we've actually got a glimpse into how the Fed is looking at the current economical landscape. And from what they're seeing, and especially with this news that's just come out about the jobs reports, potentially having been skewed to show higher jobs numbers previously. Now, payroll reporting is in. They've corrected the jobs numbers by about 800,000. That is a very strong indicator that we are potentially going to see some movement on interest rates in the next month, maybe two. So we are hoping to see a quarter point reduction each of the next 3 months. Of course, that's been the fingers crossed hope and dream of everybody in the industry. Since the major rate hikes happened in 2022. So I really do think that there's some good, strong signaling with that reduced jobs report. Um, that is actually going to cause some interesting things because now I think what we're going to see is we're going to see builders who are ready to jump back in again.
I mean, already in just our small town, I've seen at least three new areas where it looks like they're building houses.
Yeah, so I can name at least two because I know Park Street
Hmm.
has really been selling like gangbusters. I know there is a large lot out there just off of Route 46 that's being
Mhm.
developed. I'm not sure exactly what they're doing there.
I'm fairly certain right down the road where they're cutting out that new patch, there's going to be a new building there too.
Yes, certainly. Yep, we did see a house lot right down the road being developed as well. And I do know there is a fantastic development going on over on the Bucks Mills Road,
Mm.
where Butler Construction is actually taking the build orders for the development. It's going to be called Buck Village. Very, very nice little subdevelopment. I think that's going to turn out really well.
Yes, and that just means more houses and more opportunity for people to own their own home.
And that's not to mention condominium projects. Not far from there, you've got Silver Lake Estates.
Yeah.
Those are fantastic little condominiums, very economically priced, great for those people who are potentially in that later cycle of their life that want the security of a managed property,
Hmm.
but they want the financial freedom of home ownership.
Which is a win-win in that situation.
Absolutely, absolutely. So I do think that there's a lot of really positive signals that are going to definitely have an effect in the near future.
Oh, for sure. Yeah, for sure. And if you're unsure how these updates might affect you, it's always a good idea to consult with a financial advisor or a mortgage specialist. Like anything I say, I'm not a specialist. So I'm just going off of stuff that I've learned through osmosis. um, so for being sure, always reach out to a professional for advice to make sure that you are navigating any of these changes in any of these areas like properly.
And it may be tempting to just ask your bank and your small town bank that you deal with, or maybe you deal with a large national bank. And you may think, well, let me check and see what my bank can do for me. Your bank is probably a great bank. Don't get me wrong. But
Yeah, I love my credit union that I
yeah,
go to. I'm not going to
we
get a
love
mortgage
our
from them.
credit union. But of course, when it comes to home loans, getting that catered advice of a mortgage specialist, a mortgage professional, particularly a mortgage broker licensed in your state. I'm a mortgage broker licensed here in the state of Maine. You may be watching from another state, and this advice does still apply. Reach out to a local mortgage broker. They are going to find you and fight for that best deal possible.
Yeah, that's a great idea right there.
Now, before we wrap up here, I do just want to talk about one last myth around home ownership, and that's going to be that home prices are too high, that you can't possibly afford to get a home right now because the home prices are too high.
I mean, they do look kind of high.
Well, that may seem to be the case. But with recent increases in wages and how high the demand is for skilled labor,
Hmm.
and for a lot of these new tech careers that are coming out, what you're seeing is that these home prices are a lot more in line with the current wage environment than what you're being led to believe. And I'm still seeing a lot of borrowers who are surprised at how well qualified they are to buy the homes they're looking at.
When we were signing up, I was sure it wasn't going to go as well as it did, but
Sure. And we only used 60% of our budget.
yeah.
I mean, that was the biggest shocker for us, was how much less than what we had we actually needed.
Yeah, like we got approved for a certain amount and we only needed 60% of it.
Exactly, exactly. So in today's market, what that's going to look like, is you might get a pre-approval, let's say just for example, for 250,000, and you might be able to find a property that fits your needs for 180, maybe even less.
So that's a surefire way to be all like, oh yeah, I can afford a loan on this, and it's actually less than what we were budgeting for. So we'll be able to make more payments on it.
Exactly, exactly. And now that does bring up one other thing I do want to touch on before we go. I know I said we were going to wrap it up, but that is such a great thing to bring up because a lot of people misunderstand when looking at a mortgage loan, say a 30-year mortgage loan, that it's actually going to take them the entire 30-year term to pay that off. Now,
Mhm.
if you make just one, one extra payment to principal every single year, I don't know if even you might not have known this, it lowers the lifetime of that loan from 30 years to 23 years. It takes 7 years off of the life of your loan. That's
That's
just
like
one payment.
unbreaking a mirror.
Exactly. Yes. Yes. Think of how many mirrors you could break without any bad luck. It's fantastic. Now, some people, they even want to go above and beyond that. They'll make an extra 2, 3 payments a year. Those people, they're going to save as much as half of the interest they would pay over the life
Mhm.
of their loan.
For sure. That is a smart thing to do.
So I do want to thank everybody who has joined us here in the live stream, everybody who tunes in to watch this later on, for spending a little bit of time getting to know Chelsea and I, the Easy First Home Loans team. We are excellent, excellent mortgage brokers located in Maine. Happy to be partnered with Rocket Mortgage at this time. Many more lenders to come. And we do hope that we'll see you soon, either in our offices or on our website. Please leave a comment. Tell us about topics you want to hear more about. I don't care if you're a listener here in the state of Maine, if you're all the way out in California. We want to hear from you. We want to know what you're thinking, and what really comes to mind when you think about home loans and home ownership. We want to hear from you. We want to do our best to serve everyone as effectively as possible. And the best way for us to do that is to hear it straight from the horse's mouth.
Yeah.
Reach out, easyfirsthomeloans.com, and we will see
Just a
you
click away.
next Wednesday at 8 p.m. Eastern Time for another episode of the Home Loan Huddle.
See ya.